Welcome back to TradeDelicious Live. It's morning briefing. It's 8:30 a.m. Let's get into a little bit of morning briefing. This is a show where both John and I, we're going to debate different positions. We're going to talk about some of the fundamentals, and we're going to get you up to scratch with everything that you need to know. We are back. It is Friday, 28th of June. It is Friday. Happy Friday morning to you, John. It's just gone 8:30 a.m. British Standard Time. I'm full of energy today. I am full of it. I'm having my second coffee. I've got a big night ahead, and I'm keen. How's your morning been?
Yeah, it's been good, mate. It's been good. I'm more keen into seeing what's going on in your night. You're not going to that bar again, are you? Where you
Yeah,
had a nice
the
little viewing
strippers are
person.
back. They're back in
Are they?
town. No. Actually, I don't have anything planned tonight. I've just been
Oh,
so sitting in the zone with politics that aren't even my politics for the all day today, and I've not chat to anyone. So I'm like, get it out
okay.
of me, John. We get it out of me. We've got to have a chat. But I want to say happy Friday to everyone in chat. Andrew, Louis, Jan, and Muskley coming in early. Anyone else, make sure you give us a wave. Say good day. Tell us where you were from and tell us what you've thought about price action so far today, because it's been a fun one. Before we jump into politics, it's going to be a politic heavy morning briefing, I think. So before we jump into that, give me a bit of a weather update, John. Give me a bit of a stance trading yesterday. How did it go? Come on, run me through it. Give me some. I don't like that you're
Weather,
looking negative. I don't like it.
yeah, weather report's bad now. It's bad. Although it's still kind of warm. It's very cloudy today. Lots of chance of it looks like it's going to rain. Put it that way.
Lots of
We've
chance
had
of
our
rain.
good days. Yeah, usually it's followed by a good storm. So yeah, we've got not the greatest weather right now, but it's going to be. I'm feeling positive about the day. Trading this week's actually been really good.
Yeah.
Really, really good.
I
Again, I've had
hate that you're
another.
surprised, but like
No,
it.
I'm not. Well. No, I'm not surprised. Well, I don't want to sound. That sounds really big-headed, doesn't it? I'm not surprised. Like, all
No.
right,
There's no
I'm
no
a
egos here.
wonderful trader. Yeah, I don't. Yeah, I don't believe in that. It's just I've had a couple of losers, but I've managed the risk really well. Come out of them super early, which has been good because there would have been four losses. So I've been happy how I've managed the trades this week. Got into the markets that I've really wanted to go into. I have this habit sometimes of going into markets that I don't want to be in. Like, just it's a weird habit that sometimes. So that's the whole reason why I built my
You're
strength
attracted to
meter.
risk.
Yeah, and things like that. There are some times where I go off the strength meter, and the whole reason I built it was to stay on track. So there are times where I do kind of go off the boat, but for the past sort of, I'd say probably 2 or 3 months, I've been on track and performance has been good. So, it just teaches me not to go off track. I was flirting a little bit with gold again yesterday. The old girl of gold, and
You're looking at
I
yourself in the
didn't take
reflection
anything,
of it.
which I
That's
was happy
that's
with.
that's all that is.
Yeah. Just like it. Just like it. Like the liquidity, like the risk, like the way it moves. But I was flirting with it a little bit, but I didn't take anything in the end because the setup didn't actually set up. So, I was fine with not doing anything over there. But yeah, everything that's kind of performing well seems to be like those Kiwi pairs, CAD pairs seem to be doing pretty well at the moment. So yeah, that's what I'm kind of into.
Yeah, I like it. I like it. I haven't traded much this week, to be honest. I've been very risk on, so to speak, where more in terms of where I'm putting my money is a little bit more risky with those Japanese yen plays and what I've been
Mm,
looking in terms of actual exposure at the moment. It's just that Japanese yen play that I haven't on the cards. Looking at maybe rebuilding that silver, but to be honest, I've never been happier going almost flat into a weekend in my
yeah.
life. This
Oh yeah.
weekend is like we could have a change of presidency in the US. We're gonna have a change of they presidents in France? No, yeah. What is it?
Yeah,
Macron,
French
is it?
president. Yeah,
Yeah, president. Yeah, not prime minister.
yeah.
He's a president. Yeah. Yeah. So we're going to have a
I hope.
change of presidency, maybe. a change of presidency in France. We might have one in the US after today's debate. And there's just no way I want to be exposed to these markets. We might even get Japanese yen intervention first thing Monday morning just to top it up. So very happy going flat, very happy being flat. In
Yeah.
cash, great time to just be holding Aussie dollar for me. Could just put all my portfolio into cash and hold the Aussie dollar for the next couple of months because I think we're going to find some strength in that. But yeah, no, pretty happy. A few things I wanted to touch on this morning. Picking up, I've got two mice in front of me, right? So I'm controlling two different computers and I keep picking up the wrong one, trying to flick over to what I actually want to show you guys. First, election debate went down this morning. As I'm sure you're aware of, if you're not aware of it, you must be living under a rock. Biden versus Trump, the election debate went down this morning. I watched it live in the Discord. I chucked it on a YouTube watch together in our Discord, and we chucked it live from CNN. And boy, was that a fun watch! You've told me you watched a couple of the highlights. What did you make of it?
Yeah, just classic Trump, I would say. That's all I would like to say about this. And I mean, it was like what we were talking about before, though, wasn't it, with Biden? I mean, if I was an American right now, you're like, you're stuck in a rock and a hard place, aren't you? Like, those are your candidates that you've got to choose from. That is insane to me. Now, obviously, Biden, loads of experience, but he's obviously struggling to remember smaller details, about what's really going on and what he wants to discuss. He got a bit sort of confused on a number of occasions, didn't he? Just with kind of how he was finishing his sentences. He started off the sentences pretty well, but coming to like the actual points, and then you've got Trump on the other hand, who didn't. He's almost like winning because nobody wants to vote for Biden because they don't know what he's talking about anymore. It's not
Right,
that
like
Biden's like
the
it's
same thing last election, wasn't it? No one wanted to vote for Trump, and that's why Biden won. Like it was kind
yeah,
of that we just want someone else in office, so Biden got in, and it's kind of flipped. It's
yeah,
the elections
exactly.
haven't turned to we want this person in. The elections have turned to we don't want this person.
Yeah, it's like who they've got two bad options. Let's go with the lesser bad option, even if the less bad option is Donald Trump is just insane to me. But this is great though for us. In term, not I don't want to sound like again just kind of trying to
Opportunity,
profit off of
opportunity.
this. But yeah, it's if Trump's now obviously leading the polls. There is going to be no doubt about that to
Massively.
me.
Yeah.
There was a huge jump yesterday because of that, or this morning in the polls. So I'm just looking at this like we're going to probably get Trumponomics again. The dollar performed very well under Trump. The stock markets performed very, very well under Trump. Because he's big into wanting to see stock markets higher, putting funding in those type of places and whatnot. So there's going to be a lot of potential upside, I think, for stock markets, and they might start pricing that in. That might be, and now the Fed's going to get a bit worried. The Fed is going to get a little bit worried because now they're thinking maybe we should have cut rates a little. They're going to be, yeah, they're going to start getting a bit worried, I think. So it's an interesting debate. I mean, did you see the golf bit as well? The golf
Well,
bit was
I
hilarious.
have it on screen for you right now. And this is actually a video that I'm going to play. It's a
Okay,
minute video that
yeah,
I'm going to play, right? But yeah, actually, let's do that. Let's show that this was by far my highlight for the whole thing. So I watched the whole thing from start to finish, and I watched the post press conferences as well, a bit of everything. And I've got a lot of thoughts and a lot of comments that I've written down from what I've noticed from a trader's perspective on where we can profit from this. And that's exactly why
yeah,
I care about this. You might sit there and go, Jordan, you don't sound American. You're not awake in American time. Why do you care about American politics? Same here with John. US dollar is the base currency across everything. Almost every trade in currencies, in commodities, whatever you're doing, the US dollar has some kind of influence in it. I go back, the movement, the price action this morning caught a lot of traders off guard. I had messages from people personally being like, what the hell just happened? I've just lost so much money. And this goes back to what I've said from day one. If you don't know the asset you're trading, don't trade it. If you do know
yeah,
the asset you're trading, know the asset you're trading,
Yeah.
understand what it is and what's going to make it move. Because this, I think some calendars didn't even have this priced in, or
Yeah.
as an event on like FX calendars and stuff like that. So this is why it's so important to understand the moving parts in the markets we trade. But nevertheless, this was my highlight, by far my highlight from the whole event. So go ahead and have a listen to this.
That I'm in very good health. I just won 2 club championships, not even senior, 2 regular club championships. To do that, you have to be quite smart, and you have to be able to hit the ball a long way. And I do it. He doesn't do it. He can't hit a ball 50 yards. He challenged me to a golf match. He can't hit a ball 50 yards. I think I'm in very good shape. I feel that I'm as in good a shape as I was 25, 30 years ago. Actually, I'm probably a little bit lighter, but I'm in as good a shape as I was years ago. I feel very good. I feel the same. But I was willing to take a cognitive test. And you know what? If I didn't do well, I aced him. Dr. Ronnie Jackson, who's a great guy when he was White House doctor. And then I took another one, a similar one. And one of them said they'd never seen anybody ace him.
Thank you. President Biden?
You can see he is 6'5" and only 223 pounds, or 235 pounds.
You never said it was
Well, you said 6'4", 200. Well, anyway, that's what anyway, just take a look at what he says he is and take a look at what he is. Look, I'd be happy to have a driving contest with him. I got my handicap, which when I was vice president, down to a 6. But by the way, I told you before, I'm happy to play golf if you carry your own bag. Think you can do it?
That's the biggest lie. He's a 6 handicap of all.
I was at 8 handicap.
Yeah.
8.
Never.
But I had, you know how many?
I've seen you swing. I know you swing.
Okay, let's
not act like children.
President Trump, we're going to
21
turn
Let's not act like children.
You
to
are
a
a child.
specific.
That I'm in very
That's the thing. What he says at the end there. Let's not act
Yeah.
like children. Obviously he's trying to get the point across of the fact that he's got like a steadier mind than Biden at the moment. So he's gone down, but to go down the route of golf, and to go down the route of I've won 2 world championships, and to do that you got to be smart. You know, well, not really. You just got to hit a ball, mate. You know what I mean? Like, come on.
I loved the way that Biden led with like, I got my handicap down to 6, and then he argued it, went, no, and then he goes back and goes, yeah, I got it to 8, and it's like, hang on a minute, that's a typical golfer right there if I've ever heard one. He just padded his stats a little bit. But what I found so funny about this, right? For 90 minutes straight, these guys argued about who was the worst president in their term. Like, just straight up debated who was the worst. And they didn't get offended once. We started talking about golf, and they both started yapping, talking over each other, getting offended. It was golf that got them offended, not the fact that they were the worst presidents or different things that had happened. It was golf that got under their skin. And, oh, what an entertaining factor that was.
Yeah, look, I must admit, I do love the little dig that Biden has as well to him, just saying like, if you can carry your bags, I'll play. It's like just a little dig in there as well. I quite enjoyed that one. But it's just insane. Like it's insane though, isn't it? Let's be fair. Like it's insane. Like that is the state of politics in the US right now, and they are like we've just discussed. They are the biggest force in markets, arguably. You know, and it's just like it baffles you, doesn't it? It really does baffle you that these people somehow get in charge. You know, you could argue with your own countries and things like that, but I think the US would be a scary place for me. Scary place. You know, I've been to the US a few times. You know, I like going over there, but would I ever want to live there? Absolutely not. No offense to anybody in this stream that is from the US, if you are watching.
Someone call Aaron and David because John's going to town.
Yeah. So I know, and he'll probably say US is the greatest because especially with the 4th of July coming up. So but you know, it scares me a little. It does scare me a little.
Anyway. Anyway, let's not just down pat the US. I agree. I wholeheartedly agree. It was a great watch. It was an interesting watch. I don't think it was a strong debate by Trump. I think it was a very weak debate from Biden. And I think that's the important, like he dodged a lot of questions, didn't answer questions that were asked of him, very important questions that he was very much handballing off. The worst part about this, Democrats called for this debate. It was on CNN, right, which is a Democratic news source. So it was kind of like that home ground advantage for Biden. They called for it. They were pushing for this debate, and that's the performance that they've put out. The first thing that was said on CNN once this debate finished was there's an emergency meeting on whether Biden is the guy. That was the first thing. That was the first thing. We had people, full-blown Democrats, full supporters of Joe Biden coming out saying, I don't think he's the bloke. So over the next few days, are we going to see Biden still in office? I don't know. There was supposed to be another debate coming up on the ABC. Is that going to go ahead? I don't know. Is the Democrat Party just going to accept defeat with the debates and not run the risk again? Or are they going to try and bounce back? How do you do that? You know, it's kind of like Macron. He played his card and then it's not worked. And it's like, you kind of shot yourself in the foot now. How are you going to recover from that? Nevertheless, we're not a political channel, believe it or not. We're not a political channel. We're not political leaders. What I do care about is where we can make money, right? The polls, as you mentioned, swung massively in Trump's favor within 5 minutes, right? 5 minutes. It was a terrible start from Biden. Polls went straight towards Trump. And we got to see a little glimpse of what the financial markets perceived if Trump got in. Excuse me. I'm getting poisoned here. We saw a large bull run in the S&P 500. We saw incredible strength across all majors in the US dollar as well. This one's interesting. We saw a 1% climb in the Shanghai index. Chinese stocks liked Trump.
Really? I'd be surprised by that.
Yeah, interesting. But from that debate, investors like the Shanghai index, and it climbed 1% throughout the debate. So US dollar strength from Trump winning in the polls, those moves have almost been completely reversed moving into the opening of today. But that's a glimpse of how financial markets are going to price in these debates and the new president.
Yeah, I think this is now the difference between before and now. We didn't know what technically we were going to get with Donald Trump. We didn't, because he was obviously new into office. Nobody really knew what he was going to do.
Yeah.
Now we kind of have a feel about what he's about. So now there's sort of an opportunity to kind of more market participants at least will start to think, okay, well, what happened now? What happened last time? Is that going to happen again? Can we then try and benefit from that? Can we try and position ourselves ahead of that event? Because the more likely it becomes, the more the market will try and price that in beforehand. We saw a huge downside in gold when Trump was announced as president. So maybe we'll start to see some downside there on gold. You know,
Yeah,
again,
well,
that kind of comes down to. Sorry, carry on.
Sorry, I think that's everyone wanting to be in the stocks. Right,
Yeah,
like there's more
exactly.
value. Trump,
Yeah.
you know, there was a little argument in there about taxes. Biden wants to tax the billionaires 25%. Trump says we should only tax them 6% because if we incentivize billionaires to do business in America, it grows our economy. So he wants to not tax them as heavily, whereas Biden wants the opposite. And I think as an investor, Trump's policies are probably a little bit more beneficial for you, incentivizing business to be done a little bit more, I want to say, free.
Yeah, definitely. So that's again, like we're kind of looking at this and like saying, where's the trade? You know, where's the trade set up for this? I like, you know, I've been very sort of bullish US dollar. I like dollar buys. I think this is now kind of adding a little bit more foundation towards that now. Obviously, we've got other key data coming up today, which can obviously swing the short-term movements and the short-term price movements. But now this is going to, you know, this is going to lead the markets coming up into November now. All this, all the debates, all the action going on in America in terms of the presidential stuff. So yeah, I think the market needs to maybe attempt. I haven't looked at the price of gold today, to be honest. Let's have a little flick down and see if there's what gold is up to. So it
Yeah,
has
I
actually
think it's
rebounded from the lows, to be honest. It has rebounded. So it does look a little bit more like it could start heading back to the upside here. The market's going to view that in one or two ways, isn't it? The risk of a Trump coming in, risk of Trump coming in, is that going to be like felt so people want to go into the gold market, or is it going to be, gold? Trump's coming in, like we just discussed. People are going to move more into the stock markets. Are we going to see a little bit of downside here? I still feel like these lows are quite vulnerable on gold, but we'll have to wait and see whether we do get that kind of push back up to the highs. Obviously, I've got an alert up here. Breaks above 23.69. I think, shorts are definitely a no-go at that point. We're probably heading back up into those
yeah.
weekly range highs at that point. So, yeah, for me, gold could be a very interesting play going forward. I don't know how it performed actually. We could just have a little look. If I just go onto the weekly chart and we can go back to 2016 where the election was, which was here. The only reason I know that off by heart is because I was in this. I
It
was up
stings,
all
does
night
it?
watching. Yeah, I was watching Trump become elected. Initially, we had this huge rally up. I was getting long because it was rallying at the time. A little bit naive back in 2016, trying to trade the. That's actually, I think that might have been my first presidential election I traded, and yeah, it completely reversed. And I don't think anybody necessarily expected that because everyone was thinking that that Trump coming in would be massive risk to markets because of the
Yeah.
uncertainty. So everyone felt that gold could go long, but obviously the dollar strength just outweighed it. Dollar rallied incredibly, and gold prices fell. We did obviously recover throughout the rest of the sort of presidential years that he was in charge. But yeah, we had that initial kind of downside burst. So we might see a similar bit of price action going on. Might actually see a little bit of a climb towards the event and then sell on the news of the actual confirmation, I guess, because that's the only thing. It's hard to the market might want to try and price it in, but it's hard to price the exact result in because you don't know until the day comes out. Anything could happen, I think last
Yeah,
time there
but
was a
Biden
whole
might not
debate.
be in office tomorrow. So
Exactly.
yeah, we might
So
have Michelle
maybe.
Obama back in the race.
Yeah, well, yeah. So there might be an opportunity here for maybe some risk in the market. That might feel that, but I don't know what the volatility index has necessarily been doing either. I know it's still low, so obviously the market's not really seeing that as too volatile. So yeah, I like gold players, but I'd be very cautious about shorting it unless we're kind of in this kind of range here. If we start to break those lows, then I'm happy to um, be a seller of gold. But it's just one to think about going forward. Yeah, I'd like to maybe see how the commitment of traders are also kind of positioning themselves. If we see the commercials kind of selling heavy and stuff, that could be quite interesting going forward. They're not selling at extremes that I would particularly like to see to be long-term short gold. So yeah, we'll have to wait to see next week to see if there's any kind of updates on the COT reports.
Yeah, we're seeing markets across the board recover the movement from the election moves. Kind of some of them better than others. You spoke on gold there. Let me go ahead and tell you to pull up the silver chart. We've seen the same down move in silver as we actually the election debate was starting to unfold. And if you go have a look on something like the 15-minute of the silver chart, we not only recovered it, but we are now rallying. So we bottomed out within an hour of the debate or something like that, and since then we've just been pushing and pushing and pushing. So a lot of value being found in silver in comparison to what you're seeing in gold at the moment as well.
Yeah, I haven't looked at the gold silver ratio as well, but I like to look at this whenever I'm trying to look at kind of where we position ourselves in terms of gold and silver. Obviously, this chart moving to the downside is just telling you that silver's the more favored over the two right now. We huge downside on the gold silver ratio. So I like the idea of being long silver. We've talked about this quite often, haven't we? So I do quite like this. It's just, again, how do we kind of get long silver to really benefit from it? We were talking about this zone down here, I believe, actually, when it broke out. And it looks like we're starting to see some upside. I haven't got involved with this, to be honest. If anything, there was a sort of smaller area of consolidation down there that got retested on Friday, and we've seen that kind of move up on Friday. It is Friday.
It is Friday.
Overnight, and prices started to move higher there. So maybe this is the chance now to start looking at sort of those silver long positions. We've got nice consolidation up here that could be targets in the short term. So any kind of significant pullbacks here could be met with a little bit of buying right now. I don't mind that at all.
Jan's just popped in and said, I closed my silver longs just before market close. Close your ears, Jan. Don't listen to us. Jan was actually the great trader that made more money on silver than we did from our analysis. And he got in, I think it was around the low 28s or 27s where Jan got in. No, it would have been the low 28s. 28 sixes. It was around those bottoms. I remember him sending me a screenshot, and I was just like, "You jammy dodger." But yeah, he picked the bottom on there. So hats off to Jan as well, and everyone else in chat. Paul's popping in. Sunday morning access. We haven't done the quote of the day. Do you want to do it?
Oh, yeah. Well, yeah, sure. As in, like, you want me to read it out? I haven't actually got the chat.
No. I'll read it out because it's your job to relate it, right? I'll read it out. Your job.
I'm doing a very poor job of it.
George Bernard Shaw. Do you know him?
Nope. Do you?
Nope. Do you want to take a swing?
You want to try and guess he's an actor again or something?
You swing first, and then I'll give it a go. I'll take a swing as well. But
I'm just going to say
Bernard Shaw, footballer,
a poet or a writer. That usually seems to work.
All right, you're going a writer. I'm going to go a mathematician.
Okay.
George Bernard, my grandfather's name. Sure. Irish playwright.
Kind of close.
Not far. An Irish playwright. If I've got the right guy. But George Bernard Shaw is coming out here. So good morning to you, Muskley. He said, the quote of the day, progress is impossible without change, and those who cannot change their minds cannot change anything. Love it.
Oh, that's perfect for trading. That's perfect
I
for
love
trading.
it. I love it. There's a hit and miss with these quotes, but that one is just, that's banging. That is banging.
Yeah. You've got to be, I always say this, you've got to be like water, right? You've got to be able to adapt to your situation as it's unfolding, and you can't be married to the bias. We could have a big fundamental bias on X, Y, and Z, but if the technicals aren't matching up with that, we can't just justify getting in something for the sake of getting into something. You've got to be able to stay liquid. You've got to be able to see the opportunities and not get married to it. I've been very guilty of marrying into, when early in my career, I was very much into, no, that's definitely going to go up, and I would add to my losses, and you learn very quickly not to do that. I like that quote. I think that is very relatable today.
I agree. I just, everything that we do here with TradeDelicious is about challenging ideas, challenging beliefs, challenging ideologies, and being open to being challenged, and being open to being wrong. Muskley, hats off to you. Happy Friday to you. That's awesome. Anything you wanted to point out before we close up?
No, obviously core PCE coming up today. This is a big one if you are in the markets. Just be aware that is coming up. Obviously, if it comes in a little bit lower, then it could match sort of what's going on in terms of CPI, PPI, and the market might want to turn and try and sell US dollars short term. Where's the trade in that? I think if it misses higher, we're going to see some significant dollar rallies if we miss higher on that. So that would be my kind of look at. I am technically short euro US dollar right now. I mean, a little
Surely
bit of
not
profit.
holding over the weekend.
No, definitely not holding over the weekend. I've already bought my stop loss to break even. So, I'm kind of I'm in and out of this on today. I think, if it goes successfully, then I probably will hit my TPs because they're not a million miles away. But yeah, I won't be holding nothing over the weekend. There are French elections on Sunday. If you are Euro US dollar like me, do you want to be closer play? You want to be out, okay? Don't leave this over the weekend, I would say. Unless you are a major risk taker, then I take my hat off to you. That is completely down to you. Everyone's risk tolerance is a lot different. I'm very conservative, so yeah. But I would just say keep an eye on that. Obviously, if there's any shocks in the US dollar going forward, keep an eye on your dollar yen chart because the Bank of Japan said they will intervene on any shocks to the dollar yen rate. So that means if we see huge rallies in dollar, so core PC could be a driver today. Huge rally in the US dollar if it misses to the upside. Dollar yen could be 161s, 160, 150s very sharply. If that happens, BOJ might intervene.
Like it. I like it. Try to go flat through the weekend. Weekend news, elections, maybe two of them. That means gapping. I don't care where your stop loss is. It's not going to get hit. It's going to get gapped. So that's the one thing. We're going to take a real quick 30-second break. We'll be back on Monday. Thank you for another awesome week, John. And I'm going to join Rich over in the live trading floor. And I'm in a money-making mood. So we'll be back in 30 seconds. Cheers.
Entrance music. He's got his
I just got to remember what I was talking
now they're firing 1/16th of a pip.
No.
So when
right, also fellas, live some calories.
We're gonna have some fun here on the stream for sure.
Good morning. Happy Friday as well. What a treat that I'm joined by the boss himself. I'm joined by Jordan, and I'm also in a money-making mood. So this is what we're going to do this morning. We're going to do a quick recap on yesterday's trades. We're going to do a top-down analysis, and then we are going to get after it because the price action looks premium. Need to be a little bit careful coming into today. I might be a little bit overinflated from yesterday. I placed about 27 orders. If I say what the win rate was, I'm going to sound like a course seller. So I'm not going to say what the win rate was, but it was north of 99%. Anyway, let's pull up my chart and we can get going on the analysis for today. So in typical fashion, I cut my trades yesterday at a very, very small profit. Why do I do this? I have no idea. I joined this stream and I heard John talking about adding to losers. This is trial by fire, right? We all do this. I still do this today. I add to losers, and it's a part of my trading edge. There's a difference between adding to losers just because you're getting at a better price and adding to losers because the technical says, hey, I can average into this and the price action is still valid within my trade idea. Once I got that right in my mind, I started to make consistent gains. Can I say that? Yeah, I think so. I think so.
How consistent? You can say that if you want to say that, but we got to talk about what consistency is. But yes, I'll allow it.
I started to make gains, but it started to open up the door to negative risk to reward. Why? Because when the market goes deep into your analysis, picks up your second, maybe your third entry, how do you feel? You're in a big old drawdown and you are suddenly fighting for break even. The amount of trades I would close at break even only for the market to rally, and I caught the entry and I was like, The problem was I wasn't being patient on my first and second entry. So we scrapped all that, and now I typically just go in for the very, very best price. And if I miss it, I miss it. And this is what we did yesterday. Bad example, but we'll show it anyway. This is what we did yesterday. We were looking to get long on Euro USD. Put in a nice little field position. We can see up here we had one lot, and that was the order I placed here. The order I really wanted is this 5-lot position. So if I zoom in ever so slightly, this is where the 5-lot position was tagged. Market dropped a little bit lower. We went into a drawdown for about 4 pips, and in typical rich fashion, I closed at about 5 pips profit, making about $250 on the trade. And then look at this. Just look, another trade that just runs north of 30, 40 pips. So another $2,000 winner that Rich is not going to get to take part in. So it seems to be the story of my life. GU, same analysis on GU. If we zoom in ever so slightly, this was taken yesterday live on stream, and I was patient on this. I said, I'm just going to wait. I'm going to wait for this 5-lot entry, and I'm going to get the price I want. I got the price right here. This is where I was filled on the trade at 26.28. Sat through a pip and a half of drawdown, which is a typical characteristic of my trading. If I'm right, I'm pretty much right round about my entry. If the trade is going to fail, it just fails. I know you might say, why don't you trade it with 2 or 3 pip stop losses? Because I'm not about that life. I don't have that sort of psychology. And another trade cut at 6 pips profit, which was $600, and another trade that went north of 40 pips as well. Another $2,000 win that this guy didn't get to take part in. So there's this massive gap between what I can potentially make and what I'm actually making. Now, I'm grateful to be profitable, but I'll be a little bit more grateful if I could kind of close that gap a little bit. So that's the work that I'm doing today. But Jordan, we don't often get time to chat. So I know it's late. It's on a Friday. Run us through your week. How's that been so far?
Yeah, week's been good. I mentioned this morning, first and foremost, you touched on that yesterday, and I love what you call it, opportunity cost. Opportunity cost, right, is when you start making money. It's no longer a matter of, oh my God, I need to make money. I need to make money. It's, damn, I could have made a lot more here. Or I spent all this time. Why didn't I get anything from there? So that's what I think you're talking about there is that opportunity cost. And I love that phrase that you've brought in as well. Week as a whole, haven't done much trading, but productive nonetheless. It's been a good week. It's been an interesting week. It's been a macro intensive week. Let's go intensive, right? Because I don't want to say hell, because it's not, because we want things happening, but it's been really hard to read. It's been really hard to predict, and it's been really hard to price. Like my overall viewing on the market has changed probably 4 or 5 times over the process of this week. So it's been a tough one. I'm quite happy to be sitting on my hands. Quite happy to be going flat into this weekend. In the mood to day trade today. Going to do some day trading today, but in the mood, I'm quite happy to be going flat into the weekend because we've got the French election happening on Sunday. There's a 25% chance Biden's out of office by the end of today. So there's going to be a lot of movements to be aware of, a lot of things to be aware of when day trading today. We're going to have to be very, very cautious in how long we're holding our positions and really staying in tune with the market. If we start getting some abrupt movement, which is likely, I'm cutting positions instantly, even if they're in my favor, because I'm expecting a lot of news to print throughout today's trading day, and I don't want to be caught on the wrong side of it.
What are we thinking? Are we thinking dollar strength or dollar weakness in this news? If we had to sit on one side of the
what's the news?
Biden out of office, right?
Biden out of office, no idea. No idea what that news is going to be, because people argue that Biden's just a puppet anyway. So, I think the news more depends on who's his replacement.
Right.
I think that's right. Is it Michelle Obama? Is it Kamala Harris? Is it someone completely new? Like who is it that steps in? If this happens, a big if, right? But there is emergency meetings happening throughout the Democratic Party. There are big supporters of the Democratic Party, sponsors calling for change after this morning's debate or yesterday's debate, depending on where you are in the world. So interesting to be watching. The initial response that we saw today was Trump up in the polls was strength for the US dollar. So that's alluded to us. Well, if Trump gets up in the polls, Trump gets into office, investors, S&P 500, things like that, they deem it as positive. Should we expose ourselves to that in the more case that that's likely? After today's debate, that is more likely. So I think the trade will be US dollar strength.
Oh man, I didn't think I'd see more downside on GBP USD. I was thinking that it would probably be, wow, we're like 126.50, pretty close this morning. And I'm sitting there thinking, like, I still have this number, 130. Like, I cannot get that number out of my mind, 1.30.
Why?
On the pound. I think it was because that's where, if we look at the daily chart and we go back, we might have to go back a little bit, but when not here, it was
like 130 is a hot minute away.
Where was it? It was, I know I was trading this time, and I just, forever, the pound was sitting around about 130. So if we put a line on the chart, and this is going to completely disprove the theory, but we'll go with it. We'll go with it. Because this is a good question. Why 130? Well, I just remember trading and I was like, we're above 130. We're below 130. And I can't remember when that was. It felt like it was only a couple of weeks ago. So I'm just kind of looking at the daily chart now, and I'm just like, I have no argument for this. And I don't know. I genuinely don't know. I think maybe it's because, like, if you're trading a prop firm account, you're paid out in dollars. So you're like, hey, if I can get a stronger dollar, there's like this kind of relationship that you go, you know what? Weaker GBP USD, higher payouts. Or have I got that right? So there's one way that will give you higher payouts. There's another way that will give you cheaper challenge accounts. And so when
if you spend pounds and you're getting paid in US dollar, a stronger US dollar, a weaker Great British pound means you get more money. But that obviously also means that it's going to cost more to pay for the account. But I'm under the assumption you're probably pulling out more than you're putting in. I'm hoping. So you're going to want the stronger dollar.
So if we see GBP USD going up, that's when I'm like, okay, it might be time to buy some new challenge accounts now. When we see the GBP USD going down, that's the time that you go, come on, we're getting close to payday now on the accounts. Let's get a weaker pound. And then you can get this thing where, let's say you get paid into Wise, you can leave your money in Wise and go, I'm not taking it out just yet. I'm not going to transfer it over. So I've got almost this mini game going on within my trading. I'm trying to time the payouts as well. And so far, it doesn't feel like it's working, but the technical analysis is still working. So, yeah. Anyway, enough of that. Let's do a top down on this. We'll jump to the 4 hour. We'll start on GBP USD. Who's in control of price? Nice and simple analysis on this one. For me, it's just sellers. We've got this beautiful bearish structure come down. We've gone all the way back up. We've come down. We've made a new low by taking out this low. Now, buyers have attempted to push higher, and you'll see they've come back to this price point from the left, which is an interesting price point. We see that the market bought up from here, come down, brought up again, has come back, considered buying up again. But ultimately, we're still in a downtrend on the 4 hour. So my bias is higher time frame sells. But this is like 4 hour. Who trades the 4 hour? No, I've been known to take a few positions on the 4 hour every now and then. But 4 hour is telling me, hey, maybe this is a good idea for a pullback into this price point and a continuation to the downside. Now we jump down to the 1 hour, and the beauty on the 1 hour is when we took this low to the left at 26.20, we can see that we brought up and then we legged lower again. So for those of you who know how I read structure, I'm looking for the last bullish candle before the low was made. Anything above this is a break of structure on the 1 hour to me. Anything above this is a definite break of structure. So on the 1 hour, I can say, hey, buyers have taken control of price here. And this looks pretty good for a buy. Where would I want to buy? We put the fibs on and we look to buy from the low to the high. We buy on the pullback. So there would have been an entry on this if I wasn't asleep, but man's got to get his recovery. So market has already moved on the 1 hour. Now we start looking at these higher zones here. So much the same. Look for the last bearish candle before the high was printed. Market up here. And we see the market on the 1 hour has now came and broken structure to the low side. So we got mixed signals on the 1 hour. Again, could have bought down on this low, could have sold on this high. Markets come down, broken, swept liquidity from the Asian high and holding this price point. I can already see, or I can already understand why price has ran these highs, but no trade entry on the 1 hour. Now we go down to the last time frame. I don't want to drop down to the 1 minute, although I was spending a little bit of time on that this morning, doing a bit of studying. But for the sake of this argument, we'll look at the 15-minute. We have this beautiful high. We have a leg lower. We have a pullback. We have another leg lower. Now, traders can look at this one or two ways. We've either swept liquidity from this low, or we have a double bottom. So if I looked at this as we've swept liquidity, I'd be interested in trading this as a zone on a pullback. Nice little simple pullback and a retest to go higher. However, we've also swept this high. So if we now break under the 15-minute structure, which is going to be the last bearish candle before the high was printed, I would then be looking for sells round about this price point. So in short, market has made all the moves from the higher time frame and is still yet to produce a move on the lower time frame. So on a pullback, I'll get long on this. I'm going to go ahead and put an alert just down on the low, round about the 26.33. If the market continues higher, then I'm going to say that this was a strong demand zone and the market just pulled back and retested. That's the analysis on GBP USD. Nothing too exciting that I can take action on immediately, but at least I've now mapped out what I'm looking for and where I'm looking for it. But you said you were interested in trading today, so I want to know if you've pulled a wheel on me.
Yeah,
Yesterday, Will snuck a
no.
sneaky trade in early.
I haven't. I've been looking, but
Okay.
just before we do move on, every single day, the past few weeks, you've come in and you've done a top-down analysis straight out the gates, London Trading Floor. You've given all the information that you digest to everyone in chat like that every single day. And I'm still waiting to see a thanks in chat. Come on, guys. Every day, Rich has come in and given this awesome top-down analysis showing how he thinks, how he reads the market. We need to start getting a round of applause and a couple like buttons every time he does it. Show the man some appreciation. I'm going to speak on behalf of him. No, I'm going to speak on behalf of the TradeDelicious community to you, Rich, and say thank you, because that's awesome. That's awesome. I love the top down. I like the way you think about it. I like the way you go down from the higher time frames. Don't like the way you don't do the fundamental stuff, but that's fine because we've got morning briefing to cover that for you. So if you're here for the first hour of stream, you get a full rundown on what's happening in the world and what's happening in the technical charts. Where else would you want to be? Where else would you want to be? Come on, show some love. Get some claps in chat or something. We need a clap emoji. Is there a clap emoji? Someone spam the clap emoji. But yes, Rich, I am in a trading mood. I'm looking at the charts. I'm struggling to see where, but I've done something. I've done something that I'm gonna test out really quick, right? Everyone brace yourself. Everyone brace yourself because I've got a new scene, right? And I'm gonna bring it up on stream and we're gonna look a little bit different because I've just wanted to test it and I wanted to see how well it works. So I'm gonna need chat's feedback on this, but what are our thoughts about that? You can see both our trading platforms, both of us, while we're looking at the markets and we're trading. What's everyone's thoughts? I want to hear it. What are your thoughts, Rich?
You know, I kind of like it.
Oh,
I kind of like it.
Oh, okay. Well, look, it's just when we get into our deep conversation, and sometimes we do. We're traders. We like to chat trading. It just allows everyone also to still keep an eye on what the markets are doing, what we're doing. You can see, you can have a read, you can zoom in a little bit. Chat, what are your thoughts? I want to know their thoughts. But to get Frank says no. Frank just straight up said no. He's just like, nah, it's not it. It's not it. He doesn't like it. This doesn't mean we're not getting rid of scenes like this, right? This is still going to be possible when we're doing a deep dive. We'll jump into it, but this is just when we're having a conversation rather than just having a look at us. You can still get the price movements. You can still see what we're doing. While I'm talking away and Rich is doing his deep down analysis on the side. If you want to see that information, you can still see that and. You can still see that. You can still get a part of it. So if you don't like it, tell me. Louis likes it. Solomon likes it. Jan likes it. Frank just doesn't like it. Sorry, Frank. We might have to get a poll in here a little bit later. But anyway, let's get back into the markets. Not seen an opportunity yet. I'm flicking through. We've seen we saw a nice, let me get ahead and pull up UJ here. We saw nice movements, bullish strength in the US election debate this morning, my time this morning, which is actually, that's a good point. I'm going to have to go ahead and make sure I can bring this up so you guys have any idea what I'm talking about. We saw some nice price action and movements. Jonathan's on the screen there. That's the wrong scene. Do you know how hard it is to control and also be here? Never mind. Give me a second, guys. I'm going to get this. There we go. We saw some nice price action, US dollar strength this morning in the US election debate, which flowed heavily in the direction of Donald Trump. And investors saw that as a bullish thing for the US dollar. So it's really interesting to see that that was coming through. Since then, across most majorities and commodities, we've seen that pretty much retraced. One thing that really caught my eye, actually, was the price action happening in the FTSE and the DAX. Now, I know you like to trade the DAX every now and then, Rich, but we've seen a very bullish open, very, very strong for the first half an hour. And since then, we've just done nothing but sell off. So really interesting to see that coming through the stocks. Pre-market, S&P 500 up about 0.2%. It was up a little bit higher. As I said, investors seen it as bullish with Donald Trump getting the win in that debate, which is really, really interesting to see. So it could give you a little bit of incentive on what's to come in the very near future. But in terms of looking at what I'm trying to find price action on, I'm looking for mean reversion. As you know, that's what I like to do. So I'm looking for something ranging. Everything's just doing V bottoms at the moment on the day. So I'm really struggling. Might try and find some Aussie dollar strength a little bit later on. But as you said, you look at that chart and you kind of think to yourself, well, where am I going to take this? Where am I going to make money in this? If anything, I want to short that back down to the low 66.2s. So it's, I'm scanning. I am scanning. I want to make some money. I want to get some risk on in the charts today. I don't want to trade the Japanese yen, but the opportunity at the moment does look like it's in the Japanese yen. Just don't want to be exposed to the Japanese yen right now. I really don't, especially on a day trading perspective. If I open 8 lots and then the Bank of Japan comes out and says, hey, we're going to intervene now, I'm screwed. I'm screwed. This is going to just jump me so far that like it's not even, it won't be funny. Like I could have a stop loss at 10 pips. It doesn't matter. If they intervene, it's going to be a 100 pip drop in 2 seconds. And if I've got 8, 9, 10 lots open, I am absolutely screwed. So I'm a little bit hesitant to be exposed to the Japanese yen. I've just seen Andreas has popped in and said the Great British Pound Aussie dollar is looking decent. So I do like the idea of getting in the Aussie. Come on. What? Andreas, what is looking decent about this? Run me through your thought process here, because I don't see where the opportunity is. Maybe going long, but short. I mean, it's or the move's happening. I want to see something going a little bit sideways to get me interested. But the short answer for you, Rich, I don't have an entry point yet. I don't know where I'm going to get in yet, but I want to be in. Yeah. There you
go. Okay. If you want to be in, what about Euro USD? I've had a quick look. I've got a couple of small orders floating in on this, only a couple of lots. I like the idea that we've got these equal lows. We all can have a good guess what might be under there. And I'm just looking at this potential range. We've broken out to the high side. We're starting to show selling pressure. And I'm thinking, what if I just kind of dipped my toe in and targeted the lows? Now, it's not quite set up as a trading opportunity that I'd want to take just yet. But I think the market's going to make a move one way or another. You were talking about USD strength earlier. This is kind of a correlated play with that. We definitely could see EU targeting these equal lows. It's only a small move. I mean, you'd only be looking about 8 to 10 pips. But possibly, as a contrarian trader, you might find an opportunity in that.
Yeah. Look, you're looking to short, is it? Yep, you're looking to short euro. John is short the euro today. I think as a team, we're probably a little bit too exposed. If we're all shorting euro, there's something wrong. There's something wrong. So no, but I do agree with you. It's actually the pound which is really selling off at the moment. I did mention that I wanted to get a bit of strength. I'd see Louis just jumped in. Louis, is it Lewis or Louis? It always bugs me. I never know if it's Louis or Lewis. So please let me know. Chat's always right. Andrew, you're not wrong. Shorted GA at 1906, which is an absolute beautiful entry point if you're looking at GA at the moment. I'll just pull it up on the left-hand side of your screen here. You can see we're selling off. The Aussie dollar strength really is bearing fruit right now. The Aussie dollar strength's coming through. That could also allude to a bit of British pound weakness. Let's have a look if we're getting the same. Yeah, okay. So we're getting a bit of pound weakness coming across the board with a fair bit of movement. But yeah, euro. Okay, so I'm thinking if you're thinking short in euro, I'm looking at something like euro Aussie, but I don't want to buy it.
I've just added to my bag GU is short as well. I'm liking this idea. We've got this sweep of the highs. We're running to the downside. I really Maybe I'm biased, but I've only dipped my toe in. Now I'll size up on this if we can start running a little bit further. So at the moment I'm short GBP USD, I'm short Euro USD. Only 3 lots total exposure. I'm down $30. I'm down a pip. So I'm literally break even. So nothing too crazy, but I'll shout. The second this starts to really show its hand, I'll shout. I'll get my 15 lots working this morning. I'm pretty confident we can get something good out of this.
Okay, you're feeling positive today?
And probably to my detriment, I am, yeah.
I like it.
Yeah, I think we all want to finish Friday on an upswing. I might have peaked yesterday. We'll find out. We'll find out. The price action makes sense. Just I'm a little early on the entry, so I'm just going to sit on my hands and wait for this. We start breaking lower, market will show its hand. It wants to go lower, and I'll start really scaling into this. I'll do that cardinal sin that John was talking about, adding to losers. I'll do it live on stream. I'll be that guy. I'll be the guy that says, hold my beer. I'll manage my risk around it as well, but just looking for that average entry price.
Yeah. Yeah. No, I like it. Maybe US dollar Japanese yen to the upside around these ones. I don't want to be exposed to the Japanese yen. Come on, Jordan.
Well, if you went
something
in with
better
8 or 9 lots and you did get slipped 100 pips, I mean, if that was typical sort of EU GU pairs, what's wrong with an $8,000 or $9,000 loss, Jordan? I mean, you sound like you
trading with
don't want one of them.
$100,000 account. That's an 8%. Like I'm up. Did you see my tweet or Discord notification I put out yesterday?
Remind me.
It was my equity curve for the year so far.
No,
No,
I
you
missed
didn't see
that.
it? Okay,
No,
so
I missed
I
it.
put out my macro and portfolio equity curve for the year so far, and I'm up 23%. Okay. So that's 6 months. I'm up 23%. And I benchmark that against the XJO or the ASX 200. The reason I benchmark it against the ASX 200, which is the Australian stock exchange here, is because my portfolio and trading accounts are based in Australian dollars. So kind of what you were talking about there with that US dollar exposure, the difference between my portfolio and the S&P 500 could be massive just because of that exchange rate exposure. For instance, 3%, the S&P 500 has made 3% more than what my portfolio has this year just because the US dollar has gained strength. That's all. Just because that's quoted in the US dollar and my portfolio is quoted in the Aussie dollar, the S&P has outperformed me. So that's why I like to base my portfolio quote like you should look at the FTSE and base yourself against the FTSE or something like that. If you trade in pounds, if you trade in US dollar, then base it against the S&P. But as a whole, up 23%. If I lost $9,000 in one position here of this account, that'll be 8%. Can you imagine eradicating 8% of your profits in one moment because you felt like just doing a little day trade in the US dollar Japanese yen? Like, nope.
No, it just doesn't. I'm trying to compute that in my brain. It just doesn't go in. So interesting story, actually. Years ago, we all must have heard of a company called eToro.
Yeah.
Now that was a big laugh. I reckon Jordan's got a little story there somewhere as well. So eToro has this thing a little while back, probably still does. I don't know. I don't follow it too close. Called Popular Investor, and you would have the opportunity to trade and build a track record, and then investors would put their money behind you. Now, about I want to say 3 years ago, I decided, hey, this would be good to start building this kind of track record. So there I was, big picture, putting all my trades out, and I went on there for around about 4 months and pretty much went about break even. And what I found during that period is when you have a winning day or a winning week, people would come along and they would copy you really quickly. It was like, hey, you got another copier. And then you would have 1 or 2 days where you didn't place a position. Why? Because the market wasn't premium. It wasn't setting up how you wanted it to. And you get notification, hey, you've lost a copier. And they would come and they would go as quick as you could, as quick as you literally could place trades. You have a bad week, you lose 50% of your copiers. You have a good week, you'd make 200% of your copiers. These people were trying to literally follow like the winning trade. Oh, he just won. He's going to have another winner. And after 4 months, I went break even. Now, you had to put money in that account to trade it. During that time, the pound, which was the currency I put money in, then went into dollars because the account was in dollars, had a fluctuation of 10% gain. I came away from that 10% better off just because the base currency's changed in value from when I deposited to when I withdrew my money. So I went break even, but actually through that period, much like yourself, I got to experience a 10% gain on the account just simply because the base currency's changed. And I thought that was pretty cool.
Yeah. Well, that's why you got to benchmark yourself against something that, like, for example, if I was benchmarking myself against the S&P 500, I would be 3% down in comparison to the S&P 500. So that means the S&P 500 so far this year, from January 1st, 2024 to now, has outperformed me by 3%, right? And it's that 3%. I think it's actually 2.89% of that is just because the US dollar has gained strength against the Aussie dollar. That's the only reason that's outperformed me.
So what's that up this year then? 25%? The S&P 500?
No, it's up. What's it up? It'll be up. Year to date. What's the S? I should know this.
I'm racing to try and find it. S&P 500.
And you
window.
It'll be 18 or 19, is it?
Let's have a look. So we're going to go back. We're going to look at the start of the year, which is around about this price.
15. Andreas is saying 15.
Yeah, I've got 6. Yeah, but that's sort of 15, 16%. Okay.
Yeah.
So what's the benchmark of the S&P 500? Round about 12%?
Yeah, it depends how you want to run to the benchmark. It depends whether you remove inflation from the benchmark as well. But yes, I think the S&P is actually a little bit higher. I think the average comes in around 14.
14. And what's the ASX benchmark?
Very, very similar. I think it's 9.10 or something, 9.27 or something around there.
So you're rubbing your hands together. You're like, I'm smashing it.
We're halfway through the year.
We're
halfway through the year. So no, I don't celebrate too early. But as of right now, I am happy. I go up when the market goes up. And this is what I've noticed from the chart that I sent in the Discord or on Twitter, if you follow me. I go up when the charts go up. I go flat or up marginally when the stocks come down. So where I'm actually outperforming the benchmark is when the indices are coming down. I'm actually holding my risk quite well. So it's mostly in there. It's where my edge has been this year so far, is not losing money. Look at that. It's making me more money.
Well, if it can do that day in, day out, week in, week out, that's impressive. Like, I mean, you probably don't get the pat on the back. Being traders, we often don't get told, hey, you're doing a good job. You just get to look at your P&L. You have a good day, you go, oh, I did okay. You have a bad day, you go, I need to improve. But I'll be the first to say it. Congratulations. Like, seriously, I know you're only 6 months through the year. You don't want to celebrate too early. But being up the amount that you are as well, you know, is there a part of you that goes, oh, what would this look like after 12 months?
No.
Come on, you must. You must. No. You must allow your brain to explore the idea of 50% year incoming.
No, not even a little bit. I know I've just taken a small scalp that lost, by the way, on the pound. If anyone was watching my screen, you can see it on screen on the left-hand side. Bought the pound US dollar at these lows here around that 120, around that 126.3 area, and it ripped straight through. So I've just cut the loss. Short $50. So nothing heavy, but cutting that loss instantly. I'm not willing to mess around with it, but no, I'm not thinking out in the clouds. I know the average, all right, and the average is coming around those 15%. I know the economic turmoil that we are embarking in for the rest of the year. Multiple elections, you know, probably a new leader over in the UK, likely a new leader in France, likely a new leader in the US now. Like, there's a lot to go on, and there's a lot that the markets need to compute, plus interest rate decisions, inflation rates, everything along those lines. So we're not in smooth sailing territory. So I'm not celebrating too early or thinking ahead. I'm actually, if anything, looking to protect these gains. If I don't trade again, you know, I've outperformed my benchmark by a margin. If I just did nothing. I'm not willing to give away that profit in an attempt to get 50 or 60% when I know the average is usually down around that 15%. If I'm outperforming, we usually say, and said multiple times, great traders usually make majority of their profit in 3 months. Right, just these select 3 months is where majority of their money comes from. There's a good chance that 3 months has been and done for me. There's a good chance that's that. The 3 months is there, and I might not make money for the rest of the year. So I'm not sitting here with an expectation of going 50%. I'll still trade. I won't adjust my risk. I like where I'm positioned. I am a bit nervous about the economic landscape moving forward, but I'm definitely not off in the clouds thinking about how to make more.
They say scared money doesn't make money. I mean,
True.
come on, live a little, Jordan. Live a little. Get that three-figure percent return a year. Come on, this is why we get into trading, to make that 100% yearly goal, right? Because surely the best in the world are doing thousands and thousands and thousands and thousands of percent. Absolutely not. The best in the world are doing, from my research, from what I hear from interviews, from what I read from from what I hear from podcasts, from what I read from documents, I hear the best in the world with consistency doing around about 45 to 60% return yearly. But we're not just talking about 1 year, we're talking about consistently, and drawdowns close to 40% of that as well. That's the information that I'm working from as well. So if you're already halfway there, come on, go for first place, Jordan. I don't think I can bait you into it, even if I wanted. I think you're firmly rooted in your trade.
I'm I'm happy with the way I'm positioned. I'm happy with the way I'm positioned and the effort that I'm putting in as well. Because keep in mind, I'm not day trading every day. I haven't been day trading very much this year, and that's the returns I'm getting. So, if I was in the zone trading every single day, which I might bring back later in the year, maybe these performance will be better, maybe it'll be worse. But when I have a look at, yes, some people can achieve the 40, 50, 60% a year. I also have a look at the effort that they put in and the work ethic and how in the zone they need to be every single day, waking up, coming back. When I look at how passive my portfolio management has been so far this year, I'm pretty happy.
Yeah, that's some solid returns. I remember talking to Sol. I was talking to Sol, and Sol was explaining that a lot of traders, they're very aggressive, and as they start building into bigger numbers, we're not just talking accounts, we're talking about like portfolios, bigger portfolios. Actually, a lot of traders dial their risk right back. So would I be trying to make 100% return a year with millions and millions? Absolutely not. But if I was on a smaller account, absolutely. Like I would be genuinely taking risks, because I think risk. I was asked yesterday about risk management. What should you risk when you're trading? And I said, well, risk management should start in your bank account. It should start with what you can afford in your bank account and how easy that is to replace in the real world. If I'm trading $100,000 account, a real account, how easy can I replace that in the real world? That's a lot of work, a lot of years it will take to rebuild $100,000. So there's a part of me that's like, you know what? If I was trading £100 account, I could replace that. So maybe I'll have a little bit of fun on a £100 account. So risk management, I think, comes from how much you're genuinely sitting on in terms of can you replace it. And my goal is, I'm pretty much 100% exposed to Forex trading. Well, I can't afford to lose 100% of what I'm exposed with. So I have to practice very, very good risk management. But yeah, there'll be a time when I'll diversify away from trading solely just the FX markets. And then that'll be when the accounts are big enough and still building that personal account. But once it's built and it's big enough, then I'll definitely be looking for smaller gains. I'll be happy with that 2% a month.
Yeah, I think I had a thought today, which straight led me to ask you a question, and you in particular. All right, so I'm going to put you on the spot a little bit, Rich. I was going through the whole thought process of, do you prefer prop trading or retail trading? Obviously, we've spoken about this. I'm going to do a quick little run through right after this as well, with where prices are at and a couple of opportunities that I see in the prices. But I just wanted to throw this your way. I know you're on a mission to get 2 million funded, is it? Is it 2 million or 4
Yep.
million?
No, 2 million.
2 million.
Just
Um,
two.
What's your goal once you've got that 2 mil funded?
Okay. Oh, this is the question of the day. So once you get 2 million funded, what I care about is the drawdown number. Drawdown numbers can be around about 200,000. That's what I'm really working with. Now, with that 200,000, I'm focusing on building personal accounts. I'm focusing on getting to a point where I'm diversified away from needing to trade a prop firm account. Of course, I would love to still trade prop firm accounts, but getting to a point where I'm like, my personal account can do some work. So I'm going to be looking at that $200,000 of drawdown, and I'm going to be saying, I'm going to try and make some significant gains on that. So be looking. Should I go in? No, I won't go into the figures, but I'll be looking to use that primarily to take withdrawals, build personal accounts much, much quicker. And then, just use it all on a trade copier and get to a point where it's like, hey, you know what? I'm excessively earning over what my expenditure is every month. Let me now see about what I can buy in terms of assets and and diversify into other portfolio opportunities. And that'll be outside of trading. Hopefully
Okay.
I got the right answer.
There's no right answer, right? There's no right answer. There's no wrong answer. I'm just curious because I had someone ask me, why don't you just trade prop? Right? Like why fund yourself? Why have your own money in there? And I've never answered this way before, and I don't know why I've never answered this way before, but I come up with an answer. And it was, if you have a bad month and go down 5% or whatever the drawdown limit is of the prop that you're trading, right? And you go down to and hit that, which could happen at any moment. Even if you're risking nothing, you could lose 100 trades on the trot, once in a blue moon event, but it could happen. What's your game plan then, right? And it's like, if you had 2 million, 3 million, 4 million in funding and you hit the drawdown, it's gone.
Yep.
You've got nothing. It's gone. Everything. It's gone. Right? If you have 2 million of your own money and you hit a 4% drill down, guess what? You still got 1.9 million. You know what I mean? Like, it's not gone.
Yep.
Now, yes, it's harder to get 2 million of your own funds. Yes. But like, that was kind of the process I did. A lot of people will just, they'll be getting cash outs and then they'll be using that to live in to live off of, and they won't be building a personal account on the side. And that's kind of where I was alluding. Are you building in a personal account on the side? Because if you get 2 million and you hit that drawdown, and it will happen at some point, right? We'll all have a bad month at some point, right? And depending on your risk management and stuff, how often that will happen, who knows? How long it will take. It might be 10 years before it happens, but I'm going to say it's likely to happen at some point throughout your career. What's your game plan when someone takes away that 2 million overnight? Bang, it's gone. Right. And you're all of a sudden back to square one, no income from that anymore, nothing coming through. And that's what a lot of people don't think about. If it's your own funds, you've just lost 5%.
Yeah.
That sucks. It does. But you've got the funding to go make that back. On a prop side, at least on that type of prop side, you don't. It's gone.
So there are caveats to that. If you're $2 million of funding, would you leverage that and put it all behind the same strategy? Myself, no, I wouldn't.
No.
I would trade 3 different approaches with it. I'd split it up to around about $700,000 pots. And what I would hope or anticipate is that each trade plays out, or each trading strategy and system plays out independently. So I would always have something cycling. I'm looking to make around about 4% gain through each one of those pots on a consistent basis monthly. But if I hit a drawdown on one, maybe did 6% on the other. If I hit break even on the other, do you see what I mean? So I'm trying to diversify my approach. Now, on the personal account, you're absolutely right. That can stomach a much, much bigger move. So I'm going to copy in everything into that personal account with adjusted risk. But when we're talking about trading prop, I don't like the idea of wake up one day and it's all been gone. It's all disappeared. I've had it happen to me 3 times already, trading in the prop space. 3 companies that I were trading with, live funded with, have said, see you later, bye, we're going now. And I was like, we start again. We start again at 0. And every single time you're like, wow, I overweighted this basket. I put 100% of my trust, 100% of my financial income into this one instance, and it just didn't play. Yeah, it did for a while. Don't get me wrong. I probably took about 14 payouts through that period, but they weren't sustainable. So I'm very, very conscious that what is sustainable, an FCA regulated broker that will protect your money up to probably about £85,000 in the UK. And obviously I know there's something you said about there's two types of brokers, one that will pay you out first and foremost, and they have to pay you if they have some financial difficulty, and the other one that probably pays you out after about 4 or 5 years. So I'm going to be very conscious to make sure that, you know, I'm
the best way to check that is that they have separate banking. So if they have a mediator, someone else who holds the money when you deposit it goes to someone else and not directly in those business accounts. Those are the ones you'll probably get your money back in the event that they go bankrupt. It's the other ones that hold the money there themselves. They're going to pay the shareholders out first.
Yeah. Okay. I'll have to be mindful of that. I mean, at the moment, it's not significant enough to go, oh, this is gonna really catch me off if something happened. And I would only trade with household names. So when people go, hey, what do you think of this broker? If I haven't heard of it, not interested. I've been in the space 6 years, and I'm only interested in trading with either recommended brokers or brokers that I've heard of that have been in business and have a really, really good track record. Let me pivot ever so slightly. We just got filled on this 5-lot trade. I'll jump down to the 1 minute. We can see we've got this beautiful rejection. Market come up. This is the price point I wanted. We went into 0.1 pip of drawdown. So I'm slipping. I'm definitely slipping. Then we sold off only 4.5 pips. So we can see this top order's up about $150 of profit at the moment. Now I've got a 9-lot order sitting up here. This is where I think the market may drive to. So I was looking for a little bit of a reaction around about here. We have found that reaction. Now I'm willing to sit through this drawdown. And not drawdown, sorry. I'm willing to sit through this profit and see if the market wants to sell off lower in the anticipation that it will come back up and fill this 9-lot entry. So much like Jordan's up 25% this year, I'm up around about $200. I'm willing to use that $200 to try and let the account breathe to about $1,000 gain within this trade. I can see that I anticipate the market is going to sell off, and I've got enough in it. I've got 6 lots in it. I'm trying to get 15. 15 is the account limit. So I'm trying to get it all filled. I'm risking around about 1.3% of the account. If it goes higher, the market was just a bit smarter than me today. And trust me, that happens many, many days. That happens almost every other day. So I'm positioning myself in a way that GU will continue moving to the downside. Looking at Euro USD quickly, we filled the final entry. Again, I'll jump down to the 1 minute. This is where I thought the market would go to and sell off. The market went a little bit deeper, 1.5 and has now started to move to the downside. So I've got a nice amount of exposure. I've got 9 lots currently in GU and EU as a short trade. So that's $90 per pip. So I'm only up $200, so I'm up like 2 pips. Nothing to write home about or get too excited, but going with a wider stop on Euro USD as well. Not convinced about this high. I can anticipate that we might come up and equal this high. And it would kind of make sense if that's where GU's trying to push up to as well. So GU's already sold lower, break this low. Euro USD has struggled to get under this low. So I want a wider stop on Euro USD. So I didn't mean to cut you off there, but I just want to talk through the trades that we're sitting in at the moment. I see you're sizing up another trade. What
that's right. Shorting US dollar Swiss franc here. I like the way we're really rejecting the high of the day, struggling to get out of there. So looking at a 5-lot short, so bringing a bit of size into the game now. Still not overly confident in it, but looking to see if we can get these down. Realistically, see if we can get it around the 0.889 3/8 are going to be where I want to start looking at scaling some of this out. Targets lower the day, but it depends how rangy the US dollar wants to be today ahead of the markets opening, and obviously PCE coming out a little bit later as well, which is going to be a big pricer for the US dollar. But liking a US dollar Swiss franc short here up at these whole number. I know you mentioned it yesterday as well. You like trading around those whole numbers. Whole numbers are good. We're rejecting that 0.9 handle really, really nicely. So looking to take that a little bit lower. I've seen Munit and Des have come in talking about how they manage the retail account using leverage. I've already expressed how I do it over and over again. With that you shouldn't. Wow, my voice is just disappearing on me. With that you shouldn't use all of the cash sitting in a trading account doing nothing. I can see Munit is pushing that forward as well. 100% agree. You shouldn't have all your trading cash just sitting in account, because there's a good chance you'll only use a good 10, maybe 15% of that. You should have it in somewhere else performing well, hopefully performing well, something a little bit more passive, and then using leverage. If you hooked up my personal account to something like FX Blue or my FX Book or like one of those analytical programs, the drawdown on risk on that would be like, you would be astonished that I call myself a trader. You would see it and just be like, these figures are disgusting. But it's because I just use the leverage and it doesn't show the actual whole portfolio value. It just shows what's available in that account. And yeah, those numbers are disgusting.
But could you do the same if you had $1,000 in your personal account? Could you remove $100 of that? Say, I'm going to put that into a $100 prop firm account, and I'm willing to use it in proportion. So I'm just going to use this account, and if I lose it, it would be the same as losing $100 in my personal account. So, for an example, in a personal
but it's not
account,
passive.
No, it's not. It's very active income. Yeah, I get that. Yeah.
So, short answer, yes. But it's likely going to have the same returns. Like, I understand, like, you can use that money better to get more equity, and I get that. And I think that's where the prop industry really thrives, when you don't have equity. That's where it really show its value, if you're trading around those $2,000 marks. But if you can scrape together, 50, 60, 70, up to $200,000 personally, then I think the prop world starts to lose its value.
Big time. I agree with that. Yeah. There's two mindsets when it comes to trading prop. Do you look at the drawdown of the account as the account balance, or do you look at the total account balance as the account balance? I've heard it talked about many, many ways. Hey, I'm a 7-figure trader. What? Because you've got $1 million like showing on screen. Like, am I a 6-figure trader because this down here reads 102,400? I can only lose $12,000. So am I a $12,000 trader, or am I a $112,000 trader? Oh, sorry, $102,000. Because really, this number down the bottom of the screen is surely just your margin. It's just your buying power. I mean, I can't lose all of this. Well, I mean, I don't think
you've been spending too much time with Will. These bad words are coming in.
Well, yeah, I mean, sorry, I just remind me Paul Will, he took a big loss yesterday on stream. He fat fingered the account, and he accidentally put on a little bit more. So, Des, tell us your thoughts on that. You're talking about trading the drawdown as the limit, or the account size as the limit. I mean, my experience is, if I've got $100,000 account, I can't lose $100,000. So that's just the leverage number, the marketing number. That's just the number that I guess is there to screw with my head. The number I care about is my max daily loss and the max overall account loss. So when I'm trading an account, I'm very mindful. I can lose $10,000. That's it. Once it's gone, it's gone. I've lost my money. So I'm trading that account in proportion to the amount I can lose. And you might say, well, Rich, then surely 1% risk is 10% risk. Absolutely it is. So there's that trade-off of, like, would you risk 10% in your personal account? No. Well, I have done in the past. Didn't last very long. But if you were trading prop, effectively risking 1% with your drawdown limit is the same as that. You're risking 10% of your account. Why do you think traders run through and cycle through accounts so quick? Because they're not willing to look at the drawdown and say, hey, I'm going to use 1% of my drawdown. They're saying, hey, I want to use 10% of my drawdown because it's only 1% risk. And I understand that if you're trading at 1% of your drawdown, you've got to make like an 80% gain to finish your phase one. Jordan has just done incredibly well this year, and he's only up 25% of what would be an 80% target. And that's taken him 6 months to do it. So if you're using risk management that way, then it would take Jordan, statistically, on a really good run, it would take him round about a year and a half to finish phase one. Now, I don't know about you, but year and a half to finish a phase one account that's a demo that's not going to pay me. And then there's a phase two waiting on the back of that. Sounds like an awfully long time. So there is that balance between kind of using the account aggressively and using it, proportionately. How I approach that, phase one, I'm just trading it a little bit more aggressively. Phase two, I dial my risk back. When it's live, my risk is cut all the way back. I need to make sure that if I lose that account, I've lost more from an R value than what it cost me to get that account live. Just as the account pulls back to break even, are we digging in? Are we going for the 9-lot order on GU? There's not many trades I want to see go into drawdown. This is one of them. I really want to see this trade pull back.
Looking, still holding 5 lots short on US dollar Swiss franc. Looking at my chart right now, this is the DAX. Have a look at this. This is looking real fun. A lot of price action happening across the DAX right now. You've seen opened up, rallied up, absolutely topped, V-top, straight down, bottomed out, low of the day, bottomed out, straight back up, created a high of the day, looking a bit of a pullback. I did see, I think it was Jan that mentioned earlier the DAX. Correct me if I'm wrong, Jan. I don't know if it was, and I apologize if it was someone else and I've skipped over it. But looking at this, broke high of the day, couldn't hold it, broke low of the day, couldn't hold it, broke high of the day, couldn't hold it, or could hold it. My bet would be couldn't hold it. Not financial advice. Read the disclaimer at the bottom. But I might try and look to see if we can fade the DAX a little bit. Still exposed to US dollar Swiss franc, and still looking to take Swiss franc a little bit lower. As you can see, the short scalp entered in at 0.9987 ahead of that 19 hole number, and trying to keep this going, keep that train running. So show some support in chat to get this US dollar Swiss franc a little bit lower. And also let me know what you're thinking. We ripped off the Band-Aid with this scene a little bit earlier. It's been about an hour with us on this scene now where you can see both charts. Are you still liking it? Is it still good? Do you still enjoy it? Do you like seeing both our screens? You're our feedback loop. What you want, we want to do for you. So if you're liking the screen, make sure you let us know. If you're not liking the screen, we can go back to the traditional and keep flipping between the scenes like this. But looking at it on the big screen, I've got it in the background. I'm quite liking being able to see both trading terminals at the same time and us chatting here. But I want some feedback, chat. So give us some feedback. I need the feedback. But feedback for you, Rich. Still short US dollar Swiss franc, 5 lots, moving sideways over the past half an hour. Realistically, looking at a short scalp. Tempted to have a look in the tempted to have a look at the DAX. Across the board, looking at kind of price movements. Gold and silver looking, silver looking a little bit more aggressive than gold. We spoke about this in morning briefing, up a little over 1% today. Gold coming in at break even. Bitcoin and Ethereum down a little bit today, which is quite surprising to see. And then looking across most currencies, US dollars finding a little bit more strength again. We're kind of rebounding, not knowing what to do. Euros down 0.06%. The big movers, from what I'm seeing, are something like Euro New Zealand or CAD Japanese yen, up 0.42% today. So CAD Japanese yen still sitting in this range, but it is up quite a fair bit. Scrolling through, Great British Pound, New Zealand dollar getting a bit of movement. We're sitting very similar to what we're seeing on Aussie dollar, Great British Pound, Aussie dollar, US dollar. We're sitting in the middle of the day, aggressive move into the middle of the day. So could be a mean reversion to try and get back to the high of the days around those 208s on Great British Pound, New Zealand dollar, but something to keep your eye on. Other than that, I'm still sitting in US dollar Swiss franc with 2 pips in profit at the moment, looking to get it a little bit further before I start scaling out of some of this position. But overall, liking where the markets are placed and liking where I'm placed.
There's a good chance that one of us is going to lose on stream and the other one's going to do all right, because your CJ, not CJ, sorry, your UF, USD CHF?
Yep.
Is, I think, a opposite trade to the dollar that I'm in, trying to sell GU and EU because I'm looking for dollar long. So the one of us is I mean, maybe we can get the pound to move, maybe the euro moves, maybe the dollar sits steady, maybe the CHF moves. Stranger things have happened. Well, I had to sit through a pullback all the way back to break even. I watched $300 go back to zero, and now we're up around about $100 again. So I'm not going to close this trade until I can see 4 figures on the account today.
Oh, baby. Nice little volume push on the Swiss franc there. As we get a little bit lower, I might look to take a bit of this position off. If we can get a little bit lower into that 8995, keep that volume. Yep, come on, keep it coming, keep it coming. Just a little bit more, half a pip. Give me a half a pip, a little kiss on the neck, shall we say? If it gives me a little kiss on the neck here, I'll look to. Oh, there it is. 3 lots off there, so that's a very, very nice little. $123, and we're continuing lower execution on that. Actually, not too bad for that. So, going to bring that stop in a break even. US dollar Swiss franc short scalp was quite tasty. Still aiming for that 89,897 price level on US dollar Swiss franc, but it gave me the little kiss on the neck. I can feel it sitting behind me. The Swiss franc it's just got that seductive red wine about it today, and I'm liking it.
I'm looking for the full birthday treat. I'm looking for the birthday, the Christmas, the Easter treat. I want them all in one go. We're looking genuinely for the market to sell down, take these double lows. If the market pulls back, fills this 9-lot order and starts to leg lower, I'll TP early on this. If it doesn't, if this is the move, I'm going to hold on to this and target these equal lows on GBP USD. It'll be around about $900 profit. So many times my entries are good. What I struggle with, and I don't mind admitting it, I struggle with take profits. I get compromised about the P&L, and I think, well, you know, it could go to here, but it also might not. Let me just take $300. And the problem is being accurate with the entries. You often get the opportunity to grab a profit, and when the losses come, they're big. They are massively big. So I need to sit through this trade and let this trade breathe a little bit. We're up about $220 at the moment. The trade that I wanted, the trade that I was convicted on, was this GBP USD 5-lot short. I'm up about 5 pips on it now. Yesterday, I did something. I traded a very, very, very good technical setup, and I made a very impulsive decision that I wanted to make this trading setup pay. So what I did is I went into the trading account and I full margined the account on the entry. And it sounds like full margin is terrible, but it was 1 to 10 leverage. It was 1 to 10 leverage. So I was exposed to about 1.2, 1.3% of the account. Nothing too crazy. Okay. But I was using all the eggs in the basket.
Yeah.
And I got the market to a pip perfect rejection. And I can tell you what the trade was. If I pull up my screen here and show Euro USD, it was this right here. This is where I caught the market to the pip. And I looked at the P&L. I had 11 lots on the market and I closed at 3 pips of profit, which is round about here. And I was like, oh, there's $300. We'll take that. And it's just ridiculous because my take profit was this bearish candle right here. And how many times am I going to watch the market sell down pretty much in a straight line over 20 pips? Jordan, we're talking nearly a $3,000 gain. And I took $300 and I'm like, I'm happy with my $300. That gap between what I'm getting, that opportunity cost, as we referenced earlier, in the beginning, it's a novelty. Hey, yeah, but I still made $300. After you've been doing it a little while, that opportunity cost gets you sacked. Like genuinely, if I was my own manager, I'd be on an improvement plan to address that real quick. And it all comes back to the thing that I don't want to admit. I'm trading too big a size. If you said, hey, Rich, just trade 1 lot, I'd have held that trade, made the same $200-300 profit, and my exposure would have been 10 times less. And so I'm trying to force myself to level up quicker than my psychology wants to. So we spoke about this yesterday that, you know, it's like my trading edge is a Ferrari, but I'm used to driving a Mini, and I'm still driving that Ferrari like a Mini, and I'm afraid to really push it. And every time I push it, I get scared and go, let's just close this. So that's what I'm doing on this trade. I'm using this as an opportunity to say, hey, we're up $350 now. We caught a pip perfect rejection on GU. We're up 7 pips on that. I'm not getting out of bed for 7 pips. There is no clear reason that I should be closing this trade. My analysis says, hold this trade till these lows. We are 9 pips away from these lows with $400 in profit. And I'm just going to sit in this trade. And this is what I need to learn to do with the real big accounts. This is what I need to learn to do. And it would be disgusting what the results would be. It would probably look like the results of your leveraged account where you're only putting in 10% of what you're willing to. But we cannot force ourselves to level up, right? I guess some things just happen organically, and it takes a bit of time. So yeah, that was
Sometimes.
mine. Sometimes, okay.
You can force yourself to level up. I think you can force yourself to level up, but it's just going to be hard, right? It's going to be challenging. I think, yeah, it's going to take a while to adjust to the numbers you're seeing on screen, and that's why it's so important to have kind of that plan and that to know your plan and know your trading style like the back of your hand, and that's why so many people recommend having like trading checklists and things like that, is because when you're learning your strategy, it's important to be very aware of what your strategy is. So when you're in times like that, rather than saying, oh, $300 profit, close it, you look at the checklist and you kind of be like, oh, actually, I'm not supposed to close here. And then you revel with yourself. Now, over time, obviously, you learn your strategy, you back of your hand, you know what you're aiming for, you know what you want, and you no longer need to look at a list or anything like that. But yes, leveling up so quickly is hard, and it's going to take a while to adjust. But I always recommend doing it, like putting yourself out the comfort zone and adjusting. I think the whole throw yourself in the deep end and learn to swim method is a good way of going about it. I've spoken. I do most things in life. I'm about that, right? Throw myself in the deep end, learn to swim, right? And if because I find I'm very okay with failure. I'm very comfortable with failure because I know how to lose properly. At least I think I know how to lose properly, and I know how to learn from it and go again. I don't sit on it for too long, right? I feel the pain and I go through all that, but it's all about learning to lose correctly. And I think throwing yourself in the deep end, the way that you are doing it, is a good move. It's just going to take a little while to adjust. It's going to take a while to adjust. You can't expect to come in and ace it. And, you know, when you say you're trading more size, and you are, like, since when we started streaming to what you're streaming now and the size that you're trading, it's not been that long, right? It might feel like it's been a while because you've been here every day and you're doing it every day and people are chatting to it. But when you actually have a look at it, it's not been very long from you going from trading, you know, 0.5 to 1 lot to 1.5 lot to 15 lot. That's, you know, a 10x jump in what, 2 months? When did you start really trading size?
Probably 3.5 months ago, maximum.
That's still not,
yeah.
You've 10x'd your size in 3 months.
Yeah, okay. When you put it that way, it hits different. It definitely hits different. And I think what it is, because I spent so long building the accounts I have on really, really low risk. Like, I'm up ridiculous amounts of R. The problem is, if I 10x that risk, then one loss wipes out 10R. And so I'm worried I'm going to get unlucky the moment I decide to scale up. So it happens. It does. Yeah.
It happens. It's happened to me in the past. I've scaled up, and the moment I started scaling up is when I walked into my drawdown. Sometimes it's a coincidence, sometimes it's not. Sometimes it's that performance base. But it's the same, like, where people say you should always like invest in the S&P 500. It's the best performing asset long term. There are years where if you had invested in the S&P 500, you would not have made much money over like a 5-year period. It would have done nothing for you, right? That's just happens to be when you got in and when you held it, and that's what printed. And the same in trading. Sometimes when you scale up, it might just be as you go into a drawdown. It might just be as you're going into the best profit streak you've ever had. You don't know. You don't know. And that's part of the risk.
So surely consistency in risk management is key then, right?
What do you mean?
Like, surely we should sit there and say, nope, I just trade 0.5%, 1%, 5%, whatever it is. Like, we should never deviate away from that, right?
Yeah, correct. You shouldn't deviate in the percentage that you risk, but you should deviate in your account size.
But then you go higher account, you scale your risk back. But then what about the equity curve of
Well, why do you scale your risk back?
Because you don't need as much money?
So it's becoming a need.
I swear some of these conversations is like playing chess with a grandmaster. Right? I swear it is. It's about performance, about self, right? But what about
no? But like what you're suggesting there is it's not about performance. It's about what you want to pay yourself.
Yeah.
So that's a different thing. That's a different thing in a whole nother light, right? Because if you're trading based on what you want to pay yourself, why? Why are we not trading based off what's going to make us the best return?
That's an interesting one, because we all get into trading to make money, and we all have a monetary goal. We all have a number. Maybe that number shifts when you get into trading, but you also have the skill equity curve. What is your, like? Imagine you start trading and you go, "Hey, I'm just going to risk 2% of my account." You're probably not going to have your account too long. Once you get a little bit better, you can probably bring that risk up as well. And that's one thing I found over the last year is my skill set is very different to what it was a year ago. And so then my risk tolerance, my win rate has changed dramatically. So I'm not just changing account sizes, I'm also changing the win rate, which now changes what I can risk on a trade, which then changes how I feel about myself, how I feel about my results, and how different the P&L is delivered as well. Or am I overcomplicating it?
No, I think there's validity to what you're saying. Like, take this for example, okay? Say you're trading $100,000 account, you're making 10% a month. You're paying yourself 10 grand. I'm going to come in and say, hey, loving your returns 10% a month. That's awesome. I'm going to give you 2 million. Right? I'm going to fund you straight up for 2 million. I want 10% returns back, right? Which is going to be $200,000 a month. But I want, because I'm putting the money up, I want 90% of the profit. So I'll give you 10% of the profit, right? That's $20,000 a month. Okay. So you're going to increase your pay by $10,000 a month, but increase your account size by 2 million. Are you changing your risk?
No, only because of the profit split. If you said it was 90% in my favor, I would cut it. Yeah, because my mind goes to, nice, I can make that 10,000 easier now. I got 2 million. How easily can I make that 10,000? I only need a couple of percent of return a month. Like I think that's the risk adverse personality I have, where it's always going, how can I protect and manage that capital? And I think it's that financial ceiling where you go, hey, I've got my first 100,000. And then you start trading it and you go, wow, if I lose this, it's going to be hard to replace. And then you get 200, 300, 400. And I'm talking about prop firm accounts. I'm not talking like real money.
Yeah.
But as you start scaling into like over 500,000 with prop firms, you then go, wow, 1% risk, it's like 5 grand. I only need like 1 hour a month. And then you start thinking, well, actually, what would a 10-hour month look like? Well, I don't need 50 grand in a month. So maybe I'll just reduce my risk so that I can achieve my goals a little bit easier, a little bit less stressful. And maybe it's flawed. Maybe I should just say I don't care about the money and I trade it as its percentage value. But maybe I don't
think it's flawed. I don't think there's anything wrong with the way that you're thinking there. And I think it's very I think it's an opinion based thing. But if you're doing the same amount of work anyway,
yeah,
right. The only thing that's changing is a number on the screen. That's the only difference. When you enter the trade, it's a different number than what you would do if you lower risk. I think you do that for a month, and then we'll be having that conversation again about opportunity cost. And you'd know that if you just had that extra 0 on that position size, which you could afford to do, you would have made 10, 15, 20 times more money doing the exact same thing.
Yeah. And 1% risk is sustainable. Yeah, definitely.
Harder up here, but you would do that for, I would bet, a month before you start thinking opportunity cost.
Yeah, maybe I need to just get to that point where I'm like, wow, the opportunity cost is so big, so painful for me to not achieve that. Actually, now I've got to do something about it. You said something the other day, and I really like this. You said comfort. You said comfort is where careers go to die. And I thought, what would that mean?
3 stages.
Trading? Yeah. So what was it? It was stress, growth, and comfort?
I call it prime. You can say growth. I say prime or peak. Stress, peak, private. Stress, peak, comfort. They're the 3 zones. They're usually used in career talks, but I like applying it to everything. Do you want me to explain it?
I caught the concept, but if you wanna give it again, yeah,
Yeah.
I'd love to hear it.
All right. So I'm going to use the example of starting a new job. You walk into a new job, new expectations, new people. You're probably very stressed. You're learning something new. It's a little bit out of the comfort zone. This is where you're not going to perform the best, right? You're still very stressed. You're putting a lot of pressure on yourself and then give it a few weeks. You're getting used to the systems that are done. You're getting used to the people that you work with. This is what we call prime. You're still motivated to prove yourself that you can do this. There's still enough stress to give you a push, but you've also got enough knowledge to know what's happening and how it works. All right. Go about a month after that, then you get into comfort. That's when you get everything down pat. You know exactly what's required of you. You know what the bare minimum job is. You know what a good job is. You know you can get away with bare minimum sometimes. You relax a little bit. You sit back and you're comfortable and everything kind of flows. Everything kind of flows. That is where careers go to die. When everything just flows, there's no growth, there's no push, there's no hunger, there's no energy to improve, right? And that's kind of what big businesses are always trying to figure out, how to get people back out of that comfort zone. And usually they use the things like promotions or put them in a different department, fly them overseas, move them, because you want to get them back into stress. Yes, they're not going to perform too well. They're going to be stressed for a couple of weeks, but then they're going to get back into that prime for a month. You're going to absolutely sprint, and then they're going to fall back on their comfort. 2 steps forward, 1 step back, 2 steps forward, 1 step back. And same with trading. When we first got in here, holy mole, what am I going? I've got 10 grand. It's gone. What on earth just happened? Okay, kind of understanding what's going on. I'm performing pretty well. My risk management's here. Okay, really comfortable. Not too fussed about improving. If I just do this for a little bit, we should be all right. Go to die. How do you get back out of that? How do you get back into that stress environment? Take on more money? Maybe, right? Lose a lot of money? Maybe. How you get back in that stress in trading is interesting, but that's the concept. Stress, peak or prime, and comfort.
I was sitting there thinking, how do I apply this to trading, and how do I recognize where I am, and how do I pivot? Because I can tell you, a comfortable trader, and that's probably before this conversation, that was my objective with trading. Can I get to a comfortable place where I got millions and I can just risk a little bit and just be like, hey, I made 10 grand today, it's fine. And it's like nothing relative to the account. But the problem is, imagine the performance laziness that is going to creep in. Like,
and no
just
growth.
Stay in bed for another 10 minutes. Yeah.
No growth. Right, I think as traders, we're all very prone to personal growth. Right, we want it. We're hungry for it. Right, we wouldn't challenge ourselves to this ridiculous industry that we try to master. Right, one of the hardest jobs in the world, if we didn't like that challenge and a bit of personal growth. So I think that also aligns to that. If you're comfortable and you're in a routine's good, but if you're in the routine and nothing's challenging you, how are you going to grow? That's my anyway. That was I get into it, but that was what I was talking about the other day. When was that? Yesterday? Day before?
Yesterday or the day before. Because I remember catching it and I was like, that's an interesting theory. I was like, there's times in my trading career that I've been absolutely hungry for it, and it's actually the times where I've been chucked in at the deep end of the pool, and then you get these periods where you go, I kind of know what. I know a little bit of what I'm looking for. We filled on this 9-lot trade. It's immediately gone into profit. And I'm like, yeah, I kind of expected that. And the same with the 5-lot trade. I'm like, yeah, just kind of bounced around the entry. It kind of makes sense. The problem is, I'm not going to get that real motivation until that trade just sails to stop loss, and the next one, and the next one, and the next one. Munich said, if you take 10 full losses in a row, you don't have a strategy. Well, I'd beg to differ. I mean, if you have
I've definitely done that.
If you have a high risk to reward, you are absolutely on the bus to taking 10 losses in a row. Like, it's going to happen. It's not even like, oh, I hope it doesn't happen. If you're going for bigger than 1-to-1 risk reward, congratulations, you will take 10 losses back to back. And that will be like your normal. You'll have to get used to that. Negative risk to reward, less likely, still possible. Doesn't mean to say you don't have a trading edge. I was up about 80 or 85R and then went through a 30R drawdown. I had a win rate of over 65% at 1-to-1. over 65%, and I went over a 30-yard drawdown. That absolutely crushed my psychology. I can tell you that put me back to the poorhouse of like, what am I doing? Immediately back to that stress state. What am I doing? What I'm using doesn't work. I don't know how to read price action. I've framed it wrong. I'm entering wrong. All that kind of stuff. Then what happened? Done the work, got to that prime state where I was like, okay, I'm a little nervous about it. And then got to that comfortable state, got funded, got paid out, went through that cycle. Market done the same to me again. Straight back to the stress state. I've got to figure out how to get out of this state. I don't want to be here. Everything's uncomfortable. Nothing works. It all hurts. And then I get back to that prime state. And that prime state, I would say, is where I am right now. I've been trading a discretionary approach for a long time. The results are remarkable, better than anything I've ever seen and experienced in 6 years of trading. Yet, I'm conscious that if I allow myself to get into that relaxed state, it's all going to go away. So every day I'm up 5 a.m. getting my morning power routine in. I'm doing my back testing.
Morning showers, cold showers now, hey?
The missus will go crazy if I'm running cold water at that time in the morning. But yeah, I'm putting in the time, putting in the work. I'm so conscious that I've been through that cycle 3 or 4 times where the market puts you through profitability, unprofitability. And I had to ask, is it myself getting comfortable that allows me to get a little bit lazy in my processes, and that stops me performing within the market? I think the market goes through cycles and it can patch your edge out and just stop working. I've had it happen several times. However, I would have pivoted quicker if I wasn't comfortable in those periods. So my job is to try and stay in that prime state. I think that's probably the healthiest and the happy medium of sort of being challenged, growing, but being competent within it as well.
I'm going to take another 100K off this trade, or one lot, if you rather talk in lots. We're just going sideways. So the probability of it heading up and hitting my break even or minor profits towards the top are getting a little bit higher. So I'm going to bank it in a little bit lower. It's an extra $20. So we're up $103 today so far. Excluding commissions, 79 including commissions. So smaller lots today with 23 still running on US dollar Swiss franc. But that's that partial exit, which we got a little bit earlier when the energy picked up, you can see was literally the bottom. So well drawn area for me. I'm quite happy with that. That was the area where I was looking to get out. So overall, decent trade. I was having a look still at the DAX. You know, we talked about it a little bit before. It did reject, come back down, but it looks like it wants to test the high of the day again. This late into the trading day, going into the amount of volatility we've already had in the DAX, if we get above this high of the day, I like the idea of shorting it, as you can tell, because I've left you with a little note saying DAX looking fun, because it does look fun. It does look fun. If it gets up above that high of the day, I think you might find some sellers, if it even has the power to get up above the high of the day. But I came in today. I wanted to make some money. Looks like I'm going to be leaving with a little bit of money. Not much.
You're putting me under pressure because I just got filled on my 9-lot trade. We're up about $300 profit on that 9-lot position, about 3 pips, nothing too crazy. But right now, I've seen a perfect rejection. If I just zoom in, there was the entry right on this level here, around on the 2742. And we're selling lower, and we've literally just gone in a straight line down 3 pips. Now, I can take the $200 and equal Jordan today, or I can trade my process. And this is a huge part of growth as a trader, caring more about your process than the P&L. I'm willing to follow my process and potentially give up $200 right now if I click close all and lose about $1,200-$1,400 if it goes to stop loss. I'm willing to accept that. I'm willing to accept that opportunity, if that's what happens, to say, I followed my process today. And if I was willing to do that over the last 100 trades, the results would be ridiculous. Now, my mind is already going, but what if it doesn't work on this trade? And this is where I've got to start thinking in terms of probabilities, right? Because like Jordan said earlier, you can get lucky, you can get unlucky. But yeah, that's I just want to add a small part about that. But yeah.
I like it. I like it. I was hoping to actually have a few more positions today. I don't know why. You can see across most markets, they've been moving crazy. Oh, US dollar, Japanese yen. What are you up to?
UJ. I'm just trying to
Interesting.
have a quick.
This is this Japanese yen? It is. This is the exact reason I didn't want to get in it today. Look at that. It looks like there's a bit of strength coming in the Japanese yen. It wouldn't have slipped me, but still a lot of movement, a lot of selling pressure. I wonder if the Bank of Japan is doing anything a little bit cheeky. But this is the exact reason why I didn't want to be in the Japanese yen today. Across all majors, you're seeing it. A bit of strength coming in the Japanese yen. Really nice bit of strength coming in the Japanese yen.
One second, Jordan. Let me just hop in ever so quickly. We're up $600 on this trade. We've clipped the market perfectly. I'm going to go to close all positions. I know I said I was going to hold this for at least $1,000. I caught the market to the pip, and I reckon that we're going to run into this price action and we're going to pull back. And as I close the positions, we can already see that's happening with price action. This is the problem with being a technical trader on the 1 minutes, on the 5 minutes, on the 50. You will see lies everywhere, and it's about working out whether or not I did the right thing. And saying that, have a look at this exit. I know we shouldn't pride ourselves on the exit, but have a look at that. Look at that. I mean, I've zoomed in as much as I can. I took a pip of drawdown, right? Trailed it down 5 pips and got out within a pipette of where the market pulled back. Is it luck? Is it skills? I mean, $600 will pay the bills. So I'm happy with that. And I got to beat Jordan today. So if I can beat Jordan.
Rich, look at me. Look at me. Right. I'm looking this way. Look that way. I want you to look that way. All right. Look at me.
This way?
Yep. That way.
Okay.
You just lied to everyone right in front of everyone. You said you were going to hold it because that's who you are. You're going to trade your process. Literally, what? 60 seconds later? 60 seconds? How long was it, chat? 60 seconds.
I absolutely set out to hold my processes and trade the P&L. Look, sometimes the market will give you scrambled eggs and you've got to, or it will give you broken eggs and you've got to make the best you can out of it. Market pulled back to 9 lots. I panicked a little bit, closed at $600 profit. It is what it is. I'm a developing trader live on stream. You get to see all the pros, all the cons. But technically I should have held the trade. Mentally, I recognize that, you know, there's opportunity for a pullback here. So just, yeah. And I think sometimes the excuse of being a negative risk to reward trader gives you the opportunity to go, yeah, but I never hold for 1-to-1 anyway. Let's just get out. I'm working on it. Grateful to have a little bit of profit, but process would have been better.
Yeah, US dollar Swiss franc finding a bit of selling momentum here. Bit of movements. I was literally about to complain about the volatility that we found throughout today's session, and it looks like something's got people talking, right? Nothing too big because prices aren't going crazy, and everyone's looking at markets right now. So any ounce of news is going to move things. Can you do me a favor, Rich? Next Wednesday, when you stream with Will again, it pains me every time. And Will, you might even be watching. I hope you are watching, but it pains me every time. When he trades the NAS 100, he calls it the NAS 100, and it really hurts me. It really, really hurts me. Can you just, next time he says NAS 100, can you just tell him NASDAQ? Like, just call it NASDAQ. Yeah, like NASDAQ. No, don't, like, it's just the CFD name is NAS 100 because they don't have the rights to call it the NASDAQ. Please just call it the NASDAQ.
Okay. And not just me, I'll hold chat accountable to it as well. When you hear Will call it that, we've got to get on board it and we've got to call it the NASDAQ. 2 comments of the day I can't ignore. One from Des. Rich, you filthy P&L trader, you dirty man. I know where that comes from, and I love that. We were talking about how to build negative associations with bad behavior patterns. Literally start saying out loud, I'm a filthy P&L trader. You will start bringing negative emotions to that behavior pattern and you'll find it, you'll fix it quicker. Des, you called me out. If Jordan didn't call me out bad enough, you called it out as well. And then Musley comes in with a lighter comment saying, our fingers are linked to our hearts. That's my excuse. My heartstrings were pulling and it just pulled the tendons on my finger and clicked that close button on that trade. And what a close it was, Jordan. We got out at the bottom. I know that doesn't excuse it, but it certainly makes me feel a little bit better at it.
No, I think you've traded well today. I think I think we've read the markets quite well. I think we've been pretty in sync. We're obviously betting against each other, but we're both walking away with money. So there's no complaints from my side. But no, it's been nice. It's been nice listening to you and your top-down analysis too. I get to watch it every morning because I'm technically controlling behind the scenes anyway. So I just needed to give you a little bit of loving because you don't get enough of it for those top-downs.
No, I appreciate it. Let me reciprocate that back to you. So we don't get Jordan live on these streams very often. Would you do us the honors and wrap the show up for us this week?
No, we're going another hour. No, I'm joking. Yeah, sure. Look, I wouldn't. I might jump back in here and there. You might. I'm hoping. As I've been telling you for a while, we're trying to change some things back end. So I'm hoping it's going to free up the time to allow me to step back in and I can be in front of we can trade a little bit because I do want to get back into day trading a bit more. My performance has been good, but I like day trading. I enjoy it. I want to get involved. But guys, thank you so much for another incredible week here at TradeDelicious. The loyal TradeDelicious community are really showing the teeth. The amount of conversation and great conversation and banter we've been getting in the Discord the past few days as well. In particular, Vanessa sending cocktails at 8 a.m. in the Bahamas. Like, come on. Where else would you get stuff like that? But it's been an absolute pleasure. Once again, London live trading floor done and dusted for another week. We're going to leave you, and you're going to come back on Monday at 8:30 a.m. British Standard Time to do it all again, where we're going to have morning briefing into London trading, into futures focus. Then we're going to have not buying it throughout the week, sprinkled in a couple episodes of Mind Over Markets, and a fun thing, we're doing a Mind Over Markets segment live. Coming soon. So we might even start doing that live so you guys can ask Louise your questions directly. But guys, thank you so much for an awesome session. Will, oh my God, I've done it again. I apologize. Rich, I know I do it every time. There's too many short names in our team. We've got nicknames for everyone and there's just too many. It's all 4-letter. Will, Rich, Dave. It's just, we sound very English. We do. We sound very English and it's alarming. But nevertheless, guys, thank you so much for taking part. I hope you have a fantastic weekend. Get away from the charts, reset, refocus. And we'll see you on Monday at 8:30 a.m. British Standard Time.
Awesome.
See you.